Oil prices slumped on Thursday after the World Health Organization officially declared coronavirus a pandemic. In addition, the US banned all travels from Europe for the next 30 days in an attempt to combat the outbreak. Risk assets are extending weakness amid the negative background. The two oil benchmarks lost more than 5% of their value in the early trade. In the meantime, the dollar-ruble pair is about to hit the mark of 75. Oil quotes edged even lower after Washington had announced overnight the suspension of flights from Europe. Brent futures dipped to $33.82 a barrel in the early session, while WTI crude retreated to $31.15. Later, the decline slowed down. However, market participants are still worried about the massive drop in oil prices. It seems, though, that the travel ban imposed by the US did not impress the markets. Traders will now wait for the stimulus measures from the Federal Reserve. At one point, oil was trading down by 1% after the official report on crude inventories in the US was published. The report showed a slight decline in oil stockpiles, but at the same time, a rise in petroleum stocks. The data did not have any major influence on the traders' sentiment, which explains why the prices had such a swift retracement. In the near future, investors will mainly focus on the news about the possible emergency meeting of OPEC+. Today, the ruble has hit its 4-year low against the US dollar. The overall risk aversion amid escalating pandemic fears and crash in oil prices continues to weigh on the ruble. Besides, the volume of foreign investments in the Russian government debt has decreased, thus undermining the ruble. The proposed measures of the Bank of Russia may help counteract the negative external factors for the ruble. The upcoming tax payment period may support the national currency as well. Russia's central bank resumed selling foreign currency on Tuesday, having sold almost $50 million on the first day. Analysts believe that this factor stopped the pair from jumping above the level of 74. In the course of the day, the ruble is likely to continue the downward movement. In the short term, the dollar-ruble pair may hit the mark of 76. Currently, the emerging market and commodity currencies remain under strong pressure on forex, with some of them losing more than 1% against the US dollar in the early trade. The American currency is extending weakness against the euro and other safe haven assets, as traders expect the US Federal Reserve to lower the key rate to its minimum level next week. That's all for now. Thanks for watching and stay tuned.